All right, okay, hello. Hello and welcome to this first webinar organized by the Africa Center for Economic Transformation, or simply known as ACET. I'm Joel Kibazo. Our subject today is priorities for Africa's recovery, growth and transformation when these difficult times are behind us. It is based on ACET's COVID-19 10-point plan for the continent. I'm really delighted that Abebe Selassie, the director of the African Department of the AIMF, is with us today. Abebe, welcome. Good to see you. And also with us today is an illustrious panel from ACET, made up of Dr. Amoako, the founder and president of ACET, Mavis Owusu-Gyamfi, the executive vice president at ACET, and Professor Benno Ndulu, the former central bank governor at Tanzania and a board member at ACET. They will speak in order in that order. I shall then open things up for questions, so please raise your electronic hand and we will do our best to get to you. My hope is that we shall touch on what actions will have the most impact for Africa's people after the pandemic. How can policy actions related to COVID-19 be implemented effectively? And in what ways can the IMF and other partners best support Africa's governments? So without further ado, I'd now like to invite Abebe to kick us off, and then we shall start the discussion from there. So Abebe, please, your remarks, and then we'll go take it from there.
Thank you so much, Joel. KY, Mavis, Benno, really wonderful to be with you all this morning. Really very grateful and honored for the invitation. So, I think quite appropriately, we need to begin thinking about what's to come after this horrible pandemic, which has wrought so much damage to our economies. And as always, ACET is in the vanguard, coming out of the gates, trying to lay out what the priorities ought to be. But I want to make one point, which is that, even though the caseload that we are seeing remains on the low side, and for the vast majority of countries, there are of course notable exceptions like South Africa, but for many of our countries, the number of cases seems thankfully low. We take our gaze off this pandemic, to our detriment. I think all of us have to be thinking that we're still in the acute phase of the pandemic. We've seen what can happen in countries with much better institutional capacity, healthcare capacity. So I think, frankly, until there's a vaccine, until there's treatments that that are safe and sound, we have to continue believing that our countries can also see the kind of outcomes we've seen elsewhere, and we still have to be in that we consider ourselves being in the acute phase of the pandemic and keep our gaze there. So that's the first point I want to stress. Now, turning to the 10 policy priorities that have been identified, I actually really liked the title of the notes that you guys circulated because it prioritizes things and lays out how we may see the next few years, which is recovery phase, then the growth phase, then transformation. I think that captures really the coming few years really very nicely. The positive external environment. I'm not sure that that external environment will be with us. So I think, as always, we're going to have to be looking a lot more inwards. At least, we shouldn't take it for granted that the external environment will be as supportive as it was in the last 20 years. So I think this puts an onus on us in terms of looking inwards. So that's one important backdrop. And then I want to make really 2 points because I know time is limited. The first point is, I think one of the things I hope, certainly, but I think will happen also is that the social contract that we have in our countries needs to be reset. I think this very much is at the heart of what ACET is outlining as the 10 policy priorities. What is it that's going to allow us to move from the debt financed investment, which supported growth, to a period where this investment that we need to do in our countries is not going to be financed by debt, but by domestic revenue mobilization. What is the kind of social contract reset that we need to allow higher revenue mobilization? I think this is a really key economic, but also political economy question. And I think it goes to the heart of the new social contract that we need to set. You know, my sense is that a bit too much, we've been borrowing, but not capturing the rate of return of all of this investment that we've made. This is because, first and foremost, I think there's been elite capture. So, you know, you know, people that should be paying taxes, companies, individuals, high net worth individuals, have not been paying their fair share of taxes. So how do we go and get them to pay their fair share of taxes? But frankly, I'm not sure that it's limited only to passing on, you know, the benefits of growth to just the rich individuals or rich company holders, but also really we haven't politically been brave enough to go and ask people to pay what is needed by way of utility tariffs to allow us to for example, repay the debts that our utility companies have been taking. So we've been passing on the benefits of this borrowing to the broader public also. So politically, what is it that's going to allow us to collect more revenues? I think the issues that you raise in your notes, transparency, governance, accountability, are all going to be part and parcel of the social contract that has to be recalibrated, reset for the coming period. So that's one point which I strongly agree. And I think by far the issue that's within our control, our country's control, that has to be worked on is really very important. The second one I want to stress, and you know, maybe inject a little bit of an idea, you know, openness to rethinking and push us is, you know, I think again, much as the global political, you know, global economic environment is going to be different, I think going back to, you know, every country is going to have to rethink its development strategy. And I would emphasize two things that really should be driving this strategy. One, I think, is the need to be really, really nimble and agile in terms of, you know, how we promote and foster growth. I'm not so sure that this immediate environment is the one where you want to be saying, oh, you know, textile manufacturing is going to be what is going to support growth going forward. If you already have invested there, then maybe you have no choice. But, you know, I sense that there will be a lot of changes globally in terms of, you know, how globalization is going to play out, how, you know, various industries are going to play out. So I think in that environment, being nimble and agile will be very, very important. That's the first one. The second one I would say is, I think, a learning that we've seen from what has happened over the last 10, 12 weeks is how important technology, digitalization is going to be. We always knew that was on the agenda beforehand, the fourth industrial revolution, and how it's going to drive a restructuring of our economies. I think we've seen that really live and in real time, including in terms of how it's facilitating conversations, dialogues like this, but also a lot of other activities, rolling out social safety nets quickly, targeting, using technology. You know, and I think a country that does not invest in this infrastructure, okay, going forward, doesn't prioritize it, I think we're going to be suffering because it's going to be such an important platform to facilitate everything else. So rather than kind of focusing on manufacturing industry, maybe they are the right answers, I don't know, particularly because they're labor intensive, they're important. But I think in this massive uncertainty that we face globally as to how things are going to shake out, a more agile, nimble strategy where we focus investment in core things like digitalization, I think will stand us in good ground rather than kind of, you know, borrowing straight ahead in things from the pre-COVID era. I will stop here. Thank you so much.
Okay, thanks very much, Abebe. And thank you for kicking us off with a rich set of points. And I think particularly your point on the technology is one I know that you'll be making quite a bit in various forums, you see, so very, very important. I'd like now to just sort of go to KY Amoako. You wanted to sort of set a few things into context. So we'll sort of start with KY on the asset side, and before going on to Mavis. So KY.
Thanks very much, Joe. And thanks, Abebe, for joining us today. I just want to pick up on a few of the things you said and link it to what ACET is doing on transformation and the context of our 10-point plan. But I read the African Economic Outlook, and one statistic hit me straight in the face. The fact that over the next almost all the progress that African countries have made over the last decade is going to be eroded by this pandemic. The per capita income in 2020 will go back to the level of 2010. The report also says that a number of people are going to be pushed back into extreme poverty. I remember there's about 26 million people, and it could go as high as 40 million people in this year. So that's tremendous. And when you think about the progress we've made, and very much, I was at the Economic Commission for Africa in the 95 to 2005. So I witnessed much of the change, the positive environment, the progress we made, the challenges Africa faced, and the lessons we learned about good macroeconomic policy, about the role of the private sector. The external environment was also good, so there was growth. But even then, I and my colleagues were concerned, how do we sustain this? Given that pattern of growth, is that what will take us into deep poverty reduction and the transformation we needed? And the answer to me then was no, that we needed to do more. So we spent quite a bit of time. I remember we went to Bellagio in 2011. I invited some real thinkers from Africa, policymakers. We invited people from China, from Brazil, from the US to come talk with us. What would it take to ensure that African countries can sustain their growth and also transform? And growth alone is not enough. And to sustain that growth and to transform, there are certain things that we need to go along also. So when I set up the African Center for Economic Transformation, that was the sense. What do we need to do? What lessons do we need to draw from our past, from what has happened in other countries? So that was the basis for our transformation agenda. So we do a lot of research work. We do a lot of advisory work with governments, and we advocate for reforms, and we get countries and others to share best practices. And we also believe in partnerships. So we bring institutions together so that collectively we work with African governments on an African-driven agenda of setting. So that's the backdrop to what ACET does. And in the process also on the transformation, we've come up with some metrics for measuring progress. You have to track progress. I have a saying which says, if you know the beginning well, the end shall not trouble you. It's an African proverb. So you have to know where you are, where you're going. And I've written a whole book on that, but that's another story. But so how do we measure transformation? How do we track progress? First of all, are we growing? And the fact that growth has gone up, there was a time we say the 6 or the 10 fastest growing countries in the world are Africa rising. We've heard of that story. But that's not sufficient, because when commodities prices hit, when the external environment becomes more difficult, that growth disappears. So we need to go beyond just growth, driven by commodities and all that. So we came up with 5 metrics to track progress. You have to grow, but then we ask ourselves, are the countries diversifying their production of export and goods from a narrow range? Are they increasing their competitiveness in external markets? Are we boosting productivity by and large across sectors? How about technologies? You mentioned technology. They say, are we upgrading our technologies as we go along? And fundamentally, are we getting improved human well-being through per capita income? So we have this metric that we decided, we came up as way back as 2014. And we started something we call the African Transformation Index, where we use to measure and to compare countries' performance. And the good news is that we have the next report of the African Transformation Index coming up in a few months. So to give us a sense of where we are going. And it shows that some progress is being made. We've looked at 48 countries, not just sub-Sahara, but also including North Africa, to see how various countries are performing. And in news, we see that about 28 countries in the last 10 years are making some progress, some more so than others, according to this metrics, and some are not. A few countries are doing spectacularly well, like Ethiopia, Rwanda, and Kenya, just to give you a few examples. And there are reasons in the report to show which sectors and why, what lessons we learn from that, what policies they are implementing. And for the countries that are not doing so well, we can also share the light on their performance and what, so that we can learn from all this progress. Therefore, it's in that context that when this pandemic came, we asked ourselves, oh my God, what does it mean for the progress that we've made on transformation over the last decade or more? Is all that going to be wiped away? And that's precisely what Abebe, you're also saying. So the question for us then, what policies do we need to put in place now that will address the short-term challenges and problems heralded again, but at the same time position our countries to rebound more quickly and to get on the growth path? So the 10 policy priorities that you just mentioned, which Mavis and Benno will be talking in greater detail, are designed to do exactly that. So I wanted to make that point, that we have some policies, how do we take them on? But let me say one issue. You talk a bit about smart policies, you talk about social contract. As we pick up on that, it's absolutely important. In a crisis, you need to build trust. And there's something we all say at the ACET, transformation leadership is critical. We, the technical people, can write all this report and talk about all this, but when it comes to implementation, you need transformative political leadership. So the question that we are asking ourselves also, would that happen? So what does it mean? It means clarity of vision. It means implementing smart policies. So all these policies we are talking about are right, but how do we implement them? What's the leadership role? It means inspiring others to greater heights. And it means governing selflessly, and that's where some of the transparency issues come from. And above all, building trust.
Okay, thank you. We'll build on some of those, but I think let's just sort of pause there for a second and just let Mavis and Professor, and then we'll go back to some of those points. Mavis, you know, wanted to sort of build on, as KY said, that on some of the 10 points, if we could just do that.
So thank you very much, Joel. And on the screen, you will see the 4 areas that Abebe spoke to and the sub-elements under each of those 4 areas that make up the proposed 10-point plan from ACET that we would like governments to consider. Now, I'm not going to go into the detail of each of these 10 points. What I just wanted to do was start with given that the economic contraction on the continent, resource mobilization and management will become critical. And as Abebe said, the global space that Africa was working in 20 years ago is very different. Even the global space that Africa was working in the last financial crisis is very different. So the importance of really thinking through not just how to improve on the areas that we've started working on, but the continent isn't quite there, but also thinking through low-hanging fruits. So if we start with a point around closing the tax loopholes and eliminating exemptions, in spite of all the growth that has been discussed on the continent and Africa rising, etc., tax to GDP ratio in sub-Saharan Africa only rose by 2 to 3 percentage points over the last 2 decades. And in at least 10 countries, it remains below 15%. I mean, we can't depend on a bailout from somewhere. We need to look in-house and think through where are potential solutions. And there are some really easy policy fixes that we are recommending governments should look at. So for example, McKinsey in their 2019 report on Unlocking Africa said, if Africa could enhance their tax performance and tariff by just closing tax loopholes, they would increase revenues by 2 to 3% of GDP, just by closing tax loopholes. So how do we look at that as a quick win for nation states? In terms of looking at policies to increase resource mobilization, could we look at digital technologies? Digital technologies, it's possible to use digital technologies to really create more efficient tax systems. So can we find some efficiency gains really quickly at a time when we desperately need resources for the continent and in every country? So that just thinking through some quick policy wins and not necessarily getting lost in structural change. KY and Abebe have talked a lot about the importance of the social compact. If we are going to close loopholes, if we are going to look at more innovative ways of raising taxes, if we're going to increase efficiency, it becomes really important the government also ensure that citizens feel confident about what is being done. So for example, in a number of countries, there are numerous overlapping initiatives. This is an inefficient use of resources. Is there a way in which, the fragmentation and proliferation of projects can be streamlined across line ministries to be more efficient? So if we are doing an SME program, could we have an SME program that talks from Ministry of Finance, Ministry of Labor, Ministry of Trade and Industry, Ministry of Agriculture, actually align rather than having 10 separate projects within a specific sector? If we are going to improve tax efficiency and if we're going to collect more taxes, can we be transparent in how those taxes are spent? So just really basic things like introducing results-based budgeting where necessary, thinking through issues around how can we strengthen the capacity of the Auditor General to really hold line ministries account, and are there ways in which we can demonstrate to the general public that public expenditure is more efficient and their taxes are being used in a more robust way? So in the governance and effectiveness and transparency, there are efficiency gains that can be found. Can we capitalize on those? And then there are also really building that social compact that both Abebe and KY spoke to. Then we go to the business and investment environment. So even before the crisis, everybody knew that Sub-Saharan Africa has an opportunity to take advantage of the demographic dividend. It could be a demographic dividend or it could be a demographic crisis. A report by the IMF says that the continent needs to create 20 million jobs per annum over the next 2 decades if that demographic opportunity is going to be a dividend rather than a crisis. To do this, you need the private sector. Africa has made great progress on improving the business environment and increasing the ease of doing business on the continent, but it lags behind the rest of the world. And investors have choices. Abebe said we had to look in-house you know, to rebuild the economy. But actually, an African investor has a choice to invest in Africa. They have a choice to invest in Asia. They have choices on where to invest. So if we want investors in Africa, we need to move faster than we are on the ease of doing business. We need to be more competitive globally, nationally, regionally, and also globally. And we need to ensure that the kinds of investments that governments prioritize around infrastructure in the post-COVID era is really focusing on making it easier for businesses to invest in the subcontinent. So let's think through where infrastructure investments are being prioritized. So taking a time to revisit policies and as per the section on governance, really make that link to opportunities for investors on the continent. And then the fourth area that we've talked about is digital innovation and entrepreneurship. And a lot of people prior to the webinar were asking, what is the world doing? What is Sub-Saharan Africa doing for innovation? How is it improving digitization? A lot of work has been initiated on the continent around digitization. But there are three fundamental gaps on the work that is being done on digitization. The first one is financing. If you look at the percentage of financing that goes to the digital sector in Sub-Saharan Africa in comparison to the rest of the world. So in 2018, the figure was 1.16 billion in Sub-Saharan Africa. One country, India, had 7 billion. One country, China, had 70 billion. So Africa is a continent, and you know, population-wise, it's on par. And you know, these countries are bigger than the continent. Nevertheless, if you look at 1.16 billion in comparison to those two countries, how are we competing? So there's real work for African governments to work together with their partners to crowd in venture capital funding, to foster entrepreneurship and accelerate advances in technology and innovation. And that advancement is rapidly evolving. You know, in a post-COVID world, digitization has ratcheted up. We've just about kept a pace as a continent, but there are other innovations that are coming out as a result of COVID. Consumers have new tastes as a result of COVID. Businesses have new ways of working as a result of COVID. So really working to attract funding in this space becomes critical. And also working to build...
I'm going to have to wrap you up, yeah.
So very quickly, building innovation ecosystems. There's a plethora of projects across the continent. I believe in 2019, it was counted, there were about 620 innovation hubs around the continent. None of them talking to each other. Even within countries, they are not aligned. As we move forward, we need to be more robust at building national and regional ecosystems if we're really going to take advantage of the opportunities that are emerging. But if you want to read more about our recommendations, you can find it on the ACET website. And I really would encourage you to read the 10-point plan. Thank you.
Thank you very much. Thank you very much, Mavis. I'm conscious of time, and I've got quite a lot of questions that are pending. So I'm going to go to Professor Benno to sort of talk to us about some of the policy prescriptions. Quick fire, Prof. And then, because I know there's a number of questions waiting for you. So, so we shall, so the floor is yours now, sir.
Thank you. Well, enter COVID-19 and we are into a ditch along the road to transformation, and we need to dig ourselves out. And my few remarks will be mostly about how do we build a bridge to go from where we are and back onto the plane where all these important things that have been spoken about, can start operating again. So I think first point is to realize that there's huge diversity even across the region, much as we speak about the region, in terms of where countries are. You know, the type of responses have varied across countries. There are those that have gone into lockdowns and are able to provide safety nets and keep the economy more or less as a going concern. They may be able to get out of there more quickly and be able to proceed along that line. But there are countries that simply could not afford or elected not to go into the deeper end of social distancing. And those might not have closed down all activities, but they still had to deal with the external realities that had curtailed global demand and also, I think, disturbed global supply chains. So as we speak about the region in 2020 going into virtually a first recession in 25 years, once you take out South Africa and Nigeria, that beach is not as big as it reads. It becomes minus 0.6% negative growth as opposed to minus 3.2, because these two giants, each one was at minus 8, will be at minus 8 this year, and minus 5.2. That's South Africa and Nigeria, respectively. In fact, 14 out of 45 countries will continue with positive growth, even in 2020, although much lower than actually it has been. Second point, I think lack of systemic resilience to shocks has again exposed the region. And one of the key tasks of economic transformation is precisely to build that resilience. Abebe talked about agility. That agility is actually built. It's not just acquired. And I think, for example, a health system that's incapable of handling needed testing, emergencies, and care is one drawback. And part of it is underinvestment in the health system, which we need to fix. There's lack of personal cautionary savings or a functional credit system to allow households to survive during lockdowns. These are things that also still need to be fixed. So I think a key target of economic transformation has to be to build this particular resilience. So the ability and speed of Africa to recover from the effects of the pandemic will very much depend on the extent of success in protecting jobs and keeping economic capacity and businesses in running order in order to enable quick return to pre-pandemic baseline. And this is extremely important. We made a mistake in the global financial crisis response by not really protecting activities rather than let them collapse. For some countries, they are still digging out themselves from that period. So this time it has to be very, very different. Third point I wanted to make is I think fiscal policy stance broadly across countries have been reasonably prudent, but I would say relatively timid for strong recovery. I know not everybody will agree with that, but the data that I think IMF has shared with us shows our recovery being much shallower than the world growth. So by 2021, would be back to 3.4% growth when the world is growing at 5.4%. And part of the reason is that our package, the sort of stimulus package on the fiscal side is only 3% of GDP when compared to double digits in many other places. So the only question is, could Africa be able to do that also? I think there has been, and there is still some scope to do this. I know people always are afraid of, stirring up inflation, not during this time, because certainly demand has collapsed and we have a lot of excess capacity because of the recession. I don't think that risk is there. And of course, there is also the question of elevated risk of debt distress that people are also afraid about. But you can only do that by actually resuming growth. So the bottom line of what I'm saying on this is pro-cyclical policies will not help us to dig out of this hole. We have just got to be bolder and smarter in getting us from here to there.
Thank you, Professor.
Yeah.
Thank you very much
for that. I've got a load of questions of people, and thank you very much for the panel. Let's at least let some people come in. I think, as I said, do please raise your electronic hand if you feel that if you would like to make a point or to sort of ask a question. We don't have much time, but let me see. I think, I can see somebody goes, Mr. Johnson Asiyama from Ghana. Is there, I don't know, are they available? Danny, could they unmute them? Let's see.
Not available.
Okay, sure. All right. Okay, I've got. What about is it Nick Westcott? Let's see. I'm just looking at the list I was given here. Nick Westcott. Yeah. No. Oh well. That's not so bad. That's good. Who was the other one that was down here? It was Vivian War. I think Vivian War. As I said, I've been given a list, and then I think they aren't able to technically sometimes come on. Okay. Oh, I see Johnson Yoshiyama now sort of joining the discussion. Mr. Yoshiyama, could you ask a question very quickly?
Yes, thank you very much.
You've got a minute before I start. You've only got a minute.
Okay, my question goes. Sure, my question goes to Professor Benno Ndulu and probably Abebe as well. For some sub-region, they've had to engage in some asset purchase programs as well as some other expansionary programs that likely, to cause liquidity problems going to the future, which would in turn impact on medium-term inflation. So I want to ask, what are the policy choices if inflation doesn't exactly go down, and you have all this excess liquidity out there after the pandemic? What are the choices? You don't want to engage in too much sterilization to increase domestic interest rates either. Are there any policy choices?
Oh, I think, can you hear him? I think he's falling out. But I think he talked about sort of, how, he was talking about central banks and how they provide levels of financing to support government. I don't know, Professor and Abebe, did you hear that? Did you sort of hear the point he was making? Yeah. So, Professor, could you sort of take it quickly, and then I'll turn to Abebe very, very quickly. We want to get as many as we can in.
Yeah, I think that conversation is there now, which is all the liquidity that is being pumped into the system. At some point, it will show up as an ugly bit which drives inflation in the future. One thing that I think one ought to look at is to see the absorptive capacity of the economy for taking up that liquidity at this point. Certainly, there is excess, there is capacity underutilization. So as I said, there is scope for channeling that into production. And certainly, I think as we look at whether deposits are building up in the banking system, which would be the place where this liquidity would park, waiting to show its ugly head later. In a number of cases, I don't see that happening right now, because once you see that, then you know you are just postponing inflation down the road.
Okay, thank you very much, Prof. Abebe, I wonder if you could comment on that.
Yes, certainly. I can. I mean, again, like Benno, I do not see this as being an issue right now. I think, you know, central banks should do what they need to right now to support their economies. If indeed there is a sense that there is excess liquidity down the road, that there's always scope to, you know, do monetary operations to mop up that liquidity and keep an eye on inflation. But right now, I don't see inflationary pressures in many countries. By no means all. I mean, there are some countries where inflation remains stubbornly high, but was the case pre-crisis also. None where we see inflation being a threat on account of the liquidity injection countries have done. And that's a problem we can attend to down the road.
Great stuff. Thank you very much, Abebe. I think, who do I see? I see Nick Westcott. Nick?
Hi, can you hear me now?
Yes, I can hear you now. I'm sorry, I couldn't hear you before. Could you kindly sort of ask your question?
Yeah, I had a very simple question, which was how Africa can achieve this kind of autonomous growth that colleagues have been talking about, given the reluctance of African countries to genuinely open up their trans-border trade. We see this kind of problem in Nigeria and the links to Benin, but also more generally. There is a real reluctance to clamp down on the corruption in the customs services and to allow the kind of free trade that would enable a larger market to generate real growth.
Okay, thank you very much, Nick. Was your question directed to anybody in particular, or should I just make the choice? No? All right. Abebe, you probably heard that question, so could you please sort of take that?
I can try. I mean, I think, you know, goes back to the points Benno is laying out earlier, and of course, KY and Mavis, you know, which is, we have to, the heterogeneity in Africa is just incredible. And, you know, just because Nigeria has had these issues with illegal cross-border trade and has taken the action that it has, we shouldn't be defining Africa as a whole on account of that. Most notably, I think, relative to particularly what has been taking place in most of the advanced countries, I think Africa has been the only region where we have actually seen a move towards, you know, a greater trade liberalization, to which now every country has signed on to. By no means are things perfect. Trade facilitation, reducing border, bureaucratic issues, even infrastructure remain big hurdles to facilitating this trade. But at least in terms of policy commitment, it is there. And autonomy for growth, we shouldn't underestimate really how much growth was domestic driven for the last many, many years. I know there's a sense that, Africa Rising played off perhaps too much on commodity prices, but that really was important for the countries that were exporting oil or, iron, copper, etc. But if you're Kenya, say, you have relying on, flour exports, other manufactured goods, high commodity prices were actually quite harmful, right? High oil prices imparted a negative terms of trade shock. So a lot of the growth that happened in the vast majority of countries which are not commodity exporting did happen because of domestic factors and not just the external largesse.
Thank you very much. I have a question here that has been sort of emailed in, and I'm afraid, Abebe, it's for you. It says, the Finance Minister of Ghana, Ken Ofori-Atta, in a recent interview with Bloomberg, admitted the deficit would be higher than projected. Are you worried?
No, I mean, it's a short answer. We spoke, I mean, you know, Benno and KY all touched on this. I mean, this is a year where when you have a 1 in 100, you know, once in every century shock like this, you do want to use, you know, more expansive fiscal policy position to support your economy, to protect lives, to protect livelihoods. In any event, I mean, you almost have no choice, right? I mean, in a context like this, revenues are going to collapse. So are you going to be increasing taxes in a time like this? You know, companies are hurting, people are hurting. So to stick to the same deficit or have a narrower deficit, you would have to take offsetting fiscal policy action. And as Benno noted earlier, this is not the year to be pursuing pro-cyclical policies that are going to make things more difficult. Now, once this crisis is behind us, is when you need to, you know, get fiscal policy back to a level that's consistent with debt sustainability, monetary policy also back towards anchoring inflation expectations. But this year, frankly, the need is for supportive policy positions. And frankly, you know, one of the things we have to also note is that, you know, our countries, the resilience that we're seeing in many of our countries in terms of the policy response simply would not have been there 15, 20 years ago. Okay? And, you know, so there's a lot of progress that has been made, and this is the year where you want to deploy that progress.
Okay, thank you very much. Sorry, it was a direct one, but he just said it was
direct to Abebe. So, you know, look, I just want to, you know, we don't have that long before we close, but I wanted to see if Rob Floyd, you know, from ACET, wanted to just talk about, give us sort of just a couple of points on sort of policy implementation, because this is all great when we're sort of talking about the policies, but what is it and how can governments be assisted, and what is the kind of assistance that can be given to government? So I'm just going to call on Rob Floyd to sort of give us a couple of points before we sort of wind up. Rob?
Yeah, thanks, Joel. And I saw that Fred K. Wood and Mark Finn and others had in the chat section had been asking some questions about implementation. Yes. If we look at the 10 points that Mavis walked us through earlier, of course, the big challenge is the how, not the what, of course, and the IMF, World Bank, AFDB, and the G20 have all been supporting on the emergency measures. Looking forward to how we ensure that there are policy measures taking place now that can secure a strong economic rebound after the crisis. We will work on implementation of these in a select number of countries in Africa, working closely with the World Bank, as well as a number of other partners, including the EU, the Economic Commission for Africa, AFDB, as well as some of our foundation partners such as MasterCard Foundation, the One Campaign, Center for Global Development, etc. And we're doing three things. First, we're defining what those needs are, and we're doing that through the Chief Economists of Government Network. We're surveying about 40 Chief Economists of Government and getting very good feedback on what they see as the priorities within their governments. And of the 10 points that Mavis went through, the three that are coming back as the highest priority are around investment policy, around revisiting national development strategies, and about domestic resource mobilization, which has been discussed earlier. We'll be working through the national COVID-19 task forces in each country. For example, in Ghana, the 10 points have already been discussed by the economic management team chaired by the Vice President, and has been referred to the COVID task force chaired by the Minister of Finance, and we hope to work with those task forces in a number of countries. And then, so once we have those priorities identified, it's integrated into the COVID-19 task forces, then we, with our partners, will support those countries with analysis and research. working with national policy institutes to ensure that policy advice is tailored to country conditions. We'll also use ACET's peer-to-peer learning platforms to ensure the countries understand what what other countries in the region are doing and what's working. So those are a few of the ways that we will try to support implementation of these policy reforms. Thank you.
Great stuff. Thank you. Thank you very much, Rob. I just thought it was quite important to at least talk about the ways in which, so it's not just the policies, but the way in which implementation can take place. It's always a challenge to do this, to do these kind of discussions because there's so many questions. But I just before close, I just wanted to say, Abebe, if there's one thing you could leave us with in sort of, in a minute, as if you've seen the 10 points, we've discussed briefly some of the implementation. I wondered, is there sort of something that, as we sort of sign off, that you could sort of leave us with?
I'm really very hesitant to summarize things. I really think it goes back to this my favorite Akan saying, which is kind of no single person can put their arms around a baobab tree. Like wisdom is like that, and I think we have to find a way forward really through conversations like this. The ideas, the leadership that entities like ACET have to inject, of course, country policymakers. We ourselves have some views about what thoughts, what has worked, has not worked in other countries. I think, at an individual country level, we have to have these conversations to try and map the way forward. What I am certain about is kind of, just we have too much potential, too much opportunity going forward, and I'm very optimistic ultimately. But we do have to overcome this challenge at the moment. But I think the future for our continent is quite rosy, and I think the question is how quickly we are able to tap into that, and the more steadfast we are in the reforms we pursue, the quicker we will unlock the dividends.
If I was to be very cheeky and ask you, are you optimistic?
Very much. Very optimistic. I started my career back home as a, I was 26 and had the opportunity to come to Accra, Kampala, and I was in Addis, in 92 to see how FX markets were working. The transformation from the early 90s in our countries, it's just incredible. And I'm not talking about this skin deep transformation of kind of having vibrant capital cities, but really in a fundamental way, the opportunity set for the next generation has been reset. And, if we can get where we have from that really weak setup, I think, from this stronger foundation, we really have an important opportunity to build on.
Well, it's very good to at least sort of that you also have perspective. And, you talk about sort of Kampala, we don't have the time to go into it, but I think you'll notice from KY's book, which he mentioned, that it is also, one of the things he talked about in the book. And I think he had interesting conversations in that period in Uganda, and, which I think we should have to have another time to be able to go into that. One of the things I wanted to do is to just sort of talk about the fact that, at ACET, there's a whole pipeline of work that is going on, So this is just the first sort of webinar, but there's a whole stream of things. So for instance, 2 days from now is sort of, there's the launch of the ACET OECD Quality Infrastructure in the 21st Century Africa report, which I think people like Rob Floyd, you saw Rob was working on. On July the 15th, there's the launch of the Smallholder Voices. And then what else? And then the key ACET document is the ATR, which is being launched hopefully in the third quarter of this year. And that will, this is a flagship document. It will have 4 chapters focused on the demographics, innovation, climate change, regional integration. After that, we also hope that there'll be another edition of the Africa Transformation Index, which has been really, it's a document that many people on the continent have sort of come to rely on. And KY talked about measuring progress. So these are all documents in which progress is measured. And when that progress is measured, comes together for discussion at what's called the Africa Transformation Forum, which we are all hoping will be held in the first quarter of the year. And so those are all just sort of things that are coming up. What I would say is that for more of what's coming up, please do keep an eye on the website. For those who haven't been there before, it's ACETforAfrica.org. I'd just like to take this opportunity to thank you, Abebe. Thank you very much for taking the time. We know these are difficult times for all of us, but particularly for people like yourselves, trying to sort of put programs and initiatives in place to help combat the pandemic. I'd like to thank the panel, KY, Mavis, Professor in Dar es Salaam, one of my favorite cities. Very good to see you. And really to thank all of you that attended. I'm sorry we couldn't get to all the questions, but sometimes it's really difficult. These discussions can go on for an hour, 2 hours, 3 hours. So hopefully we'll have another opportunity to host Abebe and to discuss some of these points further. So for now, I'll just sort of wind up and say, I'm Joel Kibazo. Stay safe.